I'd like to welcome to the stage our moderator, Nima Siar, Chief Sales Officer of FXPRIMUS, as he will introduce your speakers to our wonderful panel. Welcome, Nima.
Hello. Hello. Okay, hello, good afternoon. My name is Nima. Welcome to our Keep Your Traders Retention panel. Again, my name is Nima Siar, Chief Sales Officer for the FXPRIMUS Group. Okay, again, welcome to the Trader Retention panel. Again, my name is Nima Siar, Chief Sales Officer for the FXPRIMUS Group. I'm joined here today to my left by Lilian Appenheimer, Global Director of Customer Success at Trading Central, which empowers individual investors with an award-winning fusion of investment analytics, education, and tools necessary to level the playing field and prosper. Thank you, Lilian. Next, we have Mr. Joe Neighbour, CIO of Acuity Trading, who provides tools for brokers combining artificial and human intelligence to create unique insights for traders. Next, we have Mr. Alex Patsalides, Director of Financial Services at EBO, whose aim is to power customer engagement through bespoke AI technology. Then we're followed by Mr. Victor Fredung, CEO of Shufti Pro, which is a global trust platform powered by AI and specializing in real-time KYC. And then lastly, we have Dora Lugula, CBDO at Dash Analytics, which is an Israeli fintech company that provides trading platforms with AI fundamental analysis in any language. Thank you all for joining today. Before I get started, I just wanted to kind of gauge the audience a little better. Can you raise your hand if you work for a Forex broker or a trading platform along these lines? Okay, all right, thank you. Can you raise your hand if you're a business introducer, fund manager, anything along these lines? Okay. And can you raise your hand if you're just bored and trying to kill time before the award ceremony? Okay. There's a few of you, I know, you can't fool me. So there, I knew I got you. Okay, well, again, thanks for joining. Look, before we get into the actual panel and the discussion in terms of traders, I wanted to actually discuss the metric or KPI of total traders, or how many traders a broker has in a given month. In my opinion, this is by far the most undervalued and underutilized metric within the broker space, and I'll tell you why. You know, we see that most brokers are focusing on trading volumes, and rightfully so. Trading volumes are the name of the game. They generate revenue for the broker. But in actuality, what we see is that a lot of brokers suffer from, or they have an Achilles heel, and what that is concentration. We might see cases where maybe 80% of brokers' volumes are being generated by maybe 5 or 10% of their clients. We'll see concentration amongst, let's say, networks, countries, or even specific traders. And really, with the let's say, downside of the concentration is that in the event that there'd be, something were to happen where a market were to stop allowing Forex trading or any type of trading, or a specific network or a market were to disappear, the next day, the broker's gonna have some issues and see some different numbers on paper. Next, followed by, after the volumes, we have deposits. And obviously, deposits are exciting because the more deposits that you get should translate to more trading volumes. But this isn't necessarily the case. I can't guarantee that if $1 million comes in that we're going to have a set amount of trading volume. It just doesn't work that way. Furthermore, with most brokers operating in untraditional markets in Southeast Asia, et cetera, where PSP costs range from 4% upwards of 8%, for me, when I see a large deposit come in, I actually see a cost on my bottom line until that money's actually traded. So there are some downsides, in regards to that. Then after deposits, then you have a lot of brokers focusing on FTDs. Generally, the FTD brokers are on an affiliate or online acquisition model. And that's great as well. But the challenge with FTDs is that CPA costs are getting extortionately high. There's so much saturation with online advertising that a lot of brokers find it very challenging to get their ROI from the FTD or the CPA that they're actually paying out. So what I'll see in many cases is that a broker will be so focused on online acquisition that they're not focusing so much on trader retention. So they'll have 2,000 to 3,000 FTDs coming in the front door, and then maybe 2,000 traders leaving on the back door. So it's not efficient. And then that leads us to total traders and why it's so important. And the reason why it's so important is if a broker is in a position where month over month they're increasing their total traders, the traders are spread out through different markets, different channels, et cetera, you really get a true sense of the health of the broker's business. Because in the event there's a black swan event, whatever you want to call it, nothing significant is going to happen that's really going to impact the trader's metrics. So let's jump into it. Really, the challenge now is we know the traders are important, but how do we keep the traders engaged? How do we retain them? How do we increase their lifetime value? So we'll jump right into it. And We'll start with actually, Mr. Victor, I know you flew all the way from Sweden, so we'll start with you, my friend. What I'd like to look at is really the expectations and the needs of the traders before we move into how we can kind of retain them. So if we were to compare today's trader and let's say the trader from 5 years ago, what would you say is the single biggest difference that we see in terms of their expectations?
Yeah, so single biggest, a bit hard to tell. I'm quite a rookie when it comes to trading myself, but from my point of view as well, like when it comes to the needs from the traders as well, everybody's looking for essentially like one place stop for all their different needs as well. I know I am at least. So when it comes to my trading experience, I'm looking for like the single source to essentially do all my different trading myself. When it comes to expectations, what I personally see as well is that if one of the different providers has a certain solution, which the other ones are essentially looking for as well, the expectation is that everybody should essentially get that same feature as well, regardless if it's, let's say, in cryptocurrency, getting a special coin, which is trending at the moment. So those are some needs and expectations that I see myself.
Got it. Thanks for that. To you, Joe, what would you say, being with your background, I think you'd be great to answer this, is what would you say is the most popular trading tool, or what are traders actively searching for?
I think the landscape of traders themselves, since the pandemic in particular, there's a lot of unsophisticated money that's come to the market, so they're typically quite uneducated. And typically they're quite lazy as well. If you go into the characteristics of these guys, they don't want to do the research themselves. They come to the market because they think this is a fantastic opportunity for me to make lots of money. So expectation-wise, they start off pretty outrageous to start with because they think they're going to have this wild success. So in terms of what they're looking for, they want to be fed information that's going to make the whole process easy for them, so they don't actually have to think too much about it. So if you can put information in front of them that's logical and makes sense, then they're more likely to hit that button than anything else. So it's just a case of making sure the tools are appropriate and helpful to the end user.
Got it. I mean, do you see like a difference in, I mean, are you able to determine if based on what someone's asking for, how they're engaging the product, if they're beginners or they're advanced, so you can kind of cater to them a little better, or is it kind of just one size fits all?
I think a lot of brokers they try and go for the one size fits all approach, which I don't think necessarily works. I think if you've got, as a broker, a lot of data on your base about the behavior of clients and what sort of assets they're interested in, then you can start delivering a lot more personalization on the service itself. And I think that's where you're going to get a lot more engagement. I think it's probably down to the broker at the outset to try and establish what their interests are and find exactly what it is that they want to see and then start to deliver that to them.
Got it. Thank you. Lilian, to you, I wanted to ask you, generally the trader UX or the user experience oftentimes starts much before the actual engagement of the product and actually opening accounts or trading or whatever. So what would you say can be done before the actual trading to create the smoothest client journey?
Sure. Well, there's a lot of information out there, and it's like accessible through the internet. So it's really important to filter it down and make it easy to access. Have it tailored to the customer needs. The demographic has widened, especially in recent years, to cater not only older traders but also the younger generation, and also the different regions. So it really depends where your customers are based, and based on that, you maybe focus more on. For example, emails or for social media or providing content directly on the trading platform. So this helps the customer to kind of stay on the platform and not have too many steps to find the data, and to have easy to access information, feeling confident to place a trade right away. So that's kind of quite important. So the user experience is really important, how you place content on the trading platform to make it easy and understandable, to work through, we call it infobesity, right?
Infobesity.
Infobesity, clearing out the clutter, the lot of information you have, and making it simple to access.
Got it, appreciate that. Alex, what are your thoughts? Because I know you spend a lot of time on client journey and user experience.
It's fine. Client journey. Let's take it a step back. What about the client engagement, the whole experience of the client engagement? I believe that's something which can definitely bring brokers differentiating factor is how they treat their clients, not customers. I specifically use the term clients because a client could be a prospect, okay? So the way you treat a prospect coming to your platform, to your forex brokerage, and so on and so forth, makes a huge difference. Everything being equal, and you have two forex brokers that offer exactly the same things, if you cannot offer a customer engagement solution in the best possible way, then they will go for the other one that provides that experience. And that experience can also be had with the help of artificial intelligence, which is extremely important nowadays.
Got it, agreed, thank you. Okay, well, that's good that we get a better understanding of our trader expectations. But let's look at how we can actually engage the trader. I think this is really the name of the game here. So with you, Dor, tell me if often we see that, and for Alex as well, often we see that artificial intelligence is more artificial than intelligent. And this doesn't create a good user journey for me. I think of scenarios where I just want to get rid of this chatbot or who I'm speaking to and speak to a live person, and I get actually frustrated. What's kind of being done on your guys' end to eliminate this artificial feeling to all this?
So I think it's a really good point, because I'll try not to emphasize what we do, but as a millennial, I can say that you're absolutely right, because nowadays I believe that, or I see that the existing AI solutions is more focused on the quality of the recommendations or research made. But so I think the developments that we should all do is making the AI feel to the clients, to make them feel as if a human, a really intelligent human, wrote or did the actual research. So in general, I think the more the AI would act as a human that would have sat and did the research or the educational, whichever product, the better it will be. So it should be explainable in a way that the client should be able to very transparently understand the way the AI did its calculations, etc. In order for them to, any AI can make mistakes from time to time. We try to be as successful as possible, but no one is right 100% of the time. But as explainable it will be, the better the client will feel. Because if they can understand and if they can rely on it, even if it makes mistakes, it will be better the next time for them to come back and understand why did that mistake or why it was right this time, and then it will improve the experience of the client.
I appreciate that. Alex, let's hear your thoughts. I know you're bursting out the seams over there.
Yes. So AI, artificial intelligence, when is it more artificial and when is it more intelligent? I believe that most of you here have the experience of a bit of artificial intelligence, not really, through chatbots. Chatbots, it's like, I'm so sorry, I didn't get that, can you please repeat, and so on and so forth. You get so frustrated, so at the end of the day, you just say, oh, enough with this, F off, I want to talk to a human, and that's it, okay? That's not artificial intelligence, that's just a chatbot. True artificial intelligence and the subset of artificial intelligence, conversational AI, tries to mimic humans as best as possible. So what my company does, for example, we automate human conversations. We always say that this is a virtual agent, this is a virtual assistant, but it's backed by artificial intelligence. So it needs to be trained properly within the specific models that forex brokers are using, the payment providers are using, and so on and so forth. And this is something that we do. We pre-train our models, so up to 75% they're ready. The only thing remaining is roughly 25%, which we need to take the input from the clients and make a true artificial intelligent powered virtual agent. Having said that, you can never replace humans, never. So humans are always there, and they will be escalation process, a very elegant escalation process should need be, so the human factor will never, ever be removed from the equation.
So you're saying that the product will become more intelligent as it's being used for a longer period of time?
Exactly. The more it's being used, the more intelligent it becomes, the more it becomes a bona fide member of your organization.
Got it, very well. Obviously we see here that there's always talk about trader engagement, but a lot of the engagement that we do is very reactive as opposed to proactive. So Joe, I wanted to actually ask you, what are your thoughts on ways that we can engage the traders proactively as opposed to reactively after they've opened a trade or maybe they haven't taken an action? I really want to look at proactive retention and these type of things.
Sure. Well, again, I think it all comes down to personalization, to be honest, and delivering a personalized journey to the end user. So again, it comes down to capturing as much information from the user at the outset so that you can deliver a personalized journey to them and be able to hit the spots that they want, that's going to create them to take action on their trading account. So if we know that somebody's been hovering over the buy button on gold or on silver or whatever it may be, we then want maybe to take a proactive step at that point to say, here's some analysis to go with it that may validate or reject the view that you had on that particular market. And obviously there's ways you can do that. You can do that within the platform, you can do it via messaging, you can do it via email. So I think there's plenty of ways to do it, but I think you need to understand what it is that the client's interested in seeing in the first place. There's no good in sending out a euro-dollar trade to him if he's just been hovering over gold for the last half an hour.
So in essence, we're able to see what attempted behaviors that they're making, not necessarily the actual behavior, and then target them based on that.
Exactly, yeah.
Got it. Dora, what are your thoughts? I mean, engaging traders before they actually take action.
So kind of the same, I think, new technologies that are now being developed and recent innovation regarding that part of personalization is a real, I believe, it will maximize the relevancy of the AI tools that we are trying to, to support the clients with. And I really think that personalization is the right move for us as technology providers to really, again, maximize the relevancy of the research and the decision support that we provide the clients with, again, based on their behavioral preferences, according to their portfolio positions, holdings, and even the screens that they're looking at. I think, again, personalization is the key for that.
Got it. Then that leads me to the next question would be, you're sitting on large databases of inactive traders, people that haven't taken any action. And a lot of times, we're seeing emphasis on bringing in new traders when there's already people who've already made the commitment to the brand before. And just targeting them with, let's say, emails, these type of things, it seems a little kind of, 2010. So, what are ways that we can engage traders within the database that were active at some point, other than just looking at past trading behaviors? What exists? I don't know who'd want to jump in on that one, but engaging these traders that took action in the past and maybe upselling them, cross-selling them, these type of things. How can we do this?
I think with regards to probably themes in the market would be a good place to start. So obviously there's things that drive markets from time to time and, big headlines that people focus on, and that tends to create volatility in the market. So I think it's quite easy to pique client interest using current events and maybe use that as a tool to maybe lure them back into the world of trading, because there are potential opportunities due to the volatility that's
So based present. On geopolitical events, then you're targeting them based on...
Not necessarily geopolitical. Obviously, we've got an event going on at the moment which is creating other events as a result of that. But, even around things like earnings season, for instance, obviously stocks have become a lot more popular amongst the retail space in recent years. And, we know earnings season is coming every 3 months, and we know that there is going to be volatility on some of the big names, the big tech names that people like to trade. So we can get ahead of that, ahead of time, start preparing marketing communications to people to let them know that this event is coming, and maybe associate that with some research as well that can help them make informed decisions.
Makes sense. Lilian, you have anything on that?
Well, I think especially on the retention side, you need to provide guidance, right? Because maybe traders get lost, and don't know where to start, what to look at, and maybe feel a little bit uneasy to place a trade. Maybe they got burned a little bit and feel a little bit, uneasy to place the next trade. So here it is really important to provide guidance and connection, connect the events, in economic events or anything what's happening, to give them a little bit of assurance and provide them with information that they become more confident. There's a lot, for example, going into thematic trading, right, where you give them a little bit of an idea in which direction they could go if that's of interest, because it's currently a lot talked in the market, right? Providing them information on what other traders think about, or look at, to get a better understanding that might be of interest to actually follow through, right? So it's all about providing them information to hedge their risks, that they become more confident again to get back in the game.
Got it, got it. And to you, Alex, what would you say in terms of channels of engaging traders? I mean, I think phone calls, emails, these are the obvious things, but what else can be done, particularly from an AI perspective?
Yes. It's extremely important to try and be as close as possible to your clients or even prospects. So if you know, if you have information within your CRM, if you know their age, if you know which country they're coming from, if you know from the trading or what they have done, and if you know that they much prefer to be on alternative communication channels like Telegram, WhatsApp, anything like this, okay, then you should be there as well. So that can be done through a virtual agent which has access onto the information in the back office of a broker and will potentially also engage by providing insights. Not financial advice, not hints, insights. So let's say that, okay, Bitcoin went down, other cryptocurrencies went down, or stocks went up, or whatever. Then have the virtual agent nudge that individual who has been inactive and say, hey, Paul, how are you doing? By the way, have you seen the market news? And then provide some very timely insights which tie within the profile of that individual.
But good point. But the thing is, there's such a fine line between investment advice and actually, market research and these type of things. And from a broker perspective, you obviously want to lead the horse to water as much as you can, but you've got a lot of compliance issues, and if you're operating in multiple jurisdictions, it's very inefficient to be customized messaging. You need something kind of a blanket thing. So where is the fine line between investment advice and actually just market research? I mean, is there really a fine line, or are there creative ways to kind of get around that, circumvent that?
Well, it's not with marketing. It's through the provision of information from a different third party, which is their job to provide these insights. So once you provide that, which is from an external third party, and you're just the messenger, okay? You're just providing that. So what they're going to do later on, it's their business. So,
Joe, considering that you guys are FCA regulated, which is quite unique amongst, let's say, signal providers and market research, what does that allow you to do, or what does it allow the broker to do, passing on your information?
Well, like Alex said, obviously by having a third party involved, it means that they can provide direct calls to action, because it's not effectively coming from the broker, it's coming from somebody else. And you obviously wrap that into the risk disclaimers and risk warnings that come with it. Obviously from the regulation side of things, we aren't allowed to give investment advice, because obviously we're not speaking to the client directly. We don't understand the circumstances. We can't be making recommendations based on how much size they should be trading or how much of their portfolio they should allocate to certain assets. We can, as we say, provide ideas. We can lead them to water and provide strong rationale and good reason for these trade ideas and this research, but we can't make them press the button. We do have the ability outside of the broking side of things to be able to provide investment advice. I'm a chartered wealth manager, but we can't go out and speak to every client and understand their individual circumstances and attitudes to risk.
Well, I mean, that kind of leads me then to kind of the elephant in the room, that for most brokers, most traders are actually losing. And what tools are out there, or what is available to actually maybe give a broker the opportunity to re-engage a trader and maybe boost their confidence to take action again? I mean, do you say that maybe it's cross-selling into something like a copy trade, or an investment following of some sort, or what could brokers do out there to kind of overcome this?
So from my perspective, it comes back to education. I think there needs to be a much more emphasis on education and managing client expectation at the start. I think a lot of instances where companies like us provide insights and trade ideas, we'll still get complaints of people saying that they didn't make money from those particular signals, but most of the time they're risking 20 to 30% of their account on one trade, which is totally not sustainable. From a professional perspective, we'd be looking at 0.5% or 1% of your trading capital, which gives you a chance of being able to survive in the long run. But it's those sort of clients that are putting so much risk down on one trade that they can't stay around for the winning trades when it goes right.
And I mean, Lilian, in regards to, outside of copy trading, can a beginner, how can a beginner, let's say, trade without having to become educated on the technicals and, basically, and during a full-time job and learning everything? I mean, what are some other things available from your end?
I mean, it's a very appealing and interesting way to kind of follow someone and say like, okay, this might work, you know, because this person is successful. But it bears a lot of risk, and it's all about managing your risk. When you start trading, it doesn't matter if you're a beginner or a professional. You need to manage your risk. So you need to kind of look at risk parameters to implement into your investments or trading decisions, you know, to however the market moves in the future, that you can kind of limit that. And that's kind of where you need to look into different like analytics. It can be like from the technical side, where you look into like limitations you can place in the order from stop losses or take profits, you know, to kind of like, you know, look at the market, how it behaved in the past and how it can kind of like, you know, move in the future. And you are like limiting already your risk. So that's kind of one thing. Without learning and reading up too much about it, you know, you can kind of like, you know, provide those analytics and trade ideas and follow them through in terms of, for example, on a demo version first and then get an idea about it. It's not just about one analytic, it's all about like, you know, to look at a 360 view. It can be like technicals, which is quite an important, like, you know, look at the markets, but you also have like news. News are very much influenced. Social media, news articles can have an influence on the market development. So it's good to monitor them as well and see like what's being like, you know, discussed about, right? And then the other part is obviously economics. It's all about not just reading about an announcement coming up. It's all about like putting them into perspective, right? How have the market behaved in the past when those announcements took place, and how could that project into the future? And if you kind of put all that into a picture, then it helps you to get a more informed and confident decision.
Okay, thank you. Dora, question to you. I mean, would you say that it's more so when you're serving, let's say, traders information, can you incorporate, let's say, risk management and these type of things within the information that we're serving to them, or do you find that it's just more they want the information, entry, exit, and these type of things? What do you think here?
So as I said before, I think, of course, the first level is of course the whether should I buy that, sell that, etc. But I think again the next level or the next generation of traders and investors are looking for again the added value from the broker, meaning let me be a better investor, let me be a better trader, and then it will also help the broker, because if the trader is trading more successfully, so his lifetime will be longer. The broker will be happier, and of course, all of the ecosystem players will enjoy. So I think in the end of the day, us as a solution providers need to provide the clients with the whole package as much as we can, of course. So they'll feel empowered. They want to feel like as if they were a professional investor or trader. So the bigger the solution, or the bigger the solution will be, the client will be happier, I believe, and so 100% yes, I do agree.
Got it. So now that moves us to, let's say, if we want to look at lifetime value, trader lifetime value, this is really the KPI or metric for any trader as far as the broker is concerned. So in terms of lifetime value, it's kind of a ambiguous kind of term, but ultimately we want to increase trading frequency and size. So I don't know who would want to jump in terms of what are specific tools out there to increase the trading frequency, but more importantly, how do we track it? You know what I mean? It can be so hard to really determine if the trader is trading more, but it's related to using a specific tool.
So would you mind just saying that again for me?
Yeah, I mean, look, when we're in relation to increasing or trying to increase lifetime value, but the frequency of the trading we want to do, how do we do that? And then more importantly, how do we actually track this to see if things are working and what's working and not working?
Okay, so from what I've seen, a lot of brokers now are offering advanced analytics on trading behavior and how trades are working out for clients. Of course, they've got to be a lot more transparent about costs as well, which I think is something that the new trader particularly ignores. There's a lot of brokers out there that are charging much larger spreads, and they don't necessarily factor that in. They've gone for the shiny marketing rather than the actual baseline cost. And some of these strategies out there can be the best strategies in the world, but they can absolutely be killed by the cost of the transaction. So that's something that I think traders need to understand. And that, of course, is going to play into the lifetime value of the customer as well. But, of course, the broker has to make money. That's, we all understand that. But I think the trader maybe needs to take that into account as well. Maybe they would trade less, and therefore, if they're trading less, they can't, necessarily get blown up as quickly. So hopefully that would increase the value of the client.
A door to you question. How can we differentiate if a tool is an actual business need or nice to have? I mean, I've seen a lot of tools available, and from a broker perspective, sometimes we don't know if we really need it or not. But how can we, differentiate this?
I think nowadays it's very easy because the broker can pretty, in a few clicks, they can understand the engagement of the clients with the actual product. And I think, again, it's all about engagement in that regard, because in the end of the day, if the client will engage with that specific piece of data or information in the platform, so I guess you will not want to, just take it out, because it is what it is. And so that's very easy for the brokers. And in the end of the day, like, the broker needs to interact with his clients and understand which tools they use more and which tools they don't. And again, it's all about engagement and understanding the client's needs, questioning them, what are the needs from them as a broker, what is the added value they expect, because now clients are expecting a lot more from their service providers. So, yeah.
Got it, thank you. Alex, did you want to?
I would like to add to what my colleague said, is that engagement is hugely important. We have seen the traders change. The traders are no longer what they used to be in the past. The COVID situation has actually helped with this. So now we see much younger traders, and these traders live in an instant gratification era. They have a question, they need an answer, and they need it now. It doesn't matter if you're 24/5, 24/6, they want 24/7, and they want to be able to ask a question and get an answer back immediately. So the sooner Forex brokers understand that, okay, the trading persona has shifted, they need to take the relevant steps in order to be as closer to this new generation of traders, which are going to be the ones bringing in the revenue in times to come.
Makes sense, thank you for that. That leads me to, I always felt that there was a big disconnect in between tools that are available for traders and actually the sales teams. It's almost like they're kind of working in kind of two different silos. That leads me to believe that, is there really a need for sales teams? I mean, are we getting to the point now where everything's automated? We understand behaviors, we understand what to serve the client based on the past. I mean, what would you guys say? What would you say, Alex? Could all these tools and AI and all these tools, let's say, can they replace a sales team?
I believe that up to a large extent, if done properly, maybe yes. But I wouldn't put my hand in fire. I believe that the human factor is intrinsically linked with having a good connection with your traders. Let the AI, let artificial intelligence, let automation deal with the mundane, which is fine to be dealt with, and then let the humans deal with what is really important. We will never, ever disqualify the human factor. It's impossible.
Got it. Victor, obviously, you working with on a KYC level and understanding this process more. Obviously, you have the sales teams and you have the customer support teams as well. How can we eliminate or make the journey better for the client on an automated basis, but eliminate the need for, let's say, support teams for what Alex said, the mundane and the basic kind of day-to-day operations like KYC and AML, et cetera?
Yeah, so from our side, the more you can essentially automate, especially as you discussed as well, like customer retention as well, like giving the customers a good as well, like first user experience as well. The better journey you can give to the customers, the happier they will be long term as well. So from our side as well, we try to automate as much as possible. We try to, in our case, verify the customers in a couple of seconds time as well, just so that they can start doing what it is they essentially set out to do as well. So that's something that we see from our clients as well, which older customers are highly appreciative of as well, and that they're essentially getting a good first experience with whatever they're set out to do.
I got it. Actually, I'm using Shufti Pro as well for the automated KYC, and they definitely come in with a better. They're happier. They're not dealing with the mundane, so it's working good. Question to you, Dor, in regards to AI. Tell me something that AI can do that a human cannot do.
Yeah. So first, I think the scale of technology is something a human cannot compete with. And of course, I think AI can help a lot in, again, explaining and supporting the human in their work. Because, again, for example, you talked about sales. So, for example, with research tools, any salesperson or any marketing manager can now be a Superman, can now use, if it's automated, of course, with AI. So AI can really support the needs of the human, and I really accept or agree with what Alex said, that AI will not replace, but really empower the humans in what they need to do in their day-to-day, whether it's sales, whether it's, again, decision support, investment advice, whatever. So AI can really empower the humans in what they need, and in general, I think AI can, of course, improve what humans do in any type of actual day-to-day work, whether it's writing the explanation, whether it's, of course, having the big data analysis, and then the humans need to do their magic. But I think AI can support anything from, again, marketing to sales to research. So basically, all over the place.
So then that leads me to ask, what would you say would be more, let's say, a positive thing for the trader? What is a more successful? Targeting a trader on behaviors that they've done in the past, or predicting what they'll do in the future and trying to serve them some fresh, kind of novel information in order to take action? What would you guys say is better or works?
So I'd say it's a combination. You need to learn from the past and try to predict the future, meaning you can, again, explain the client, the client, listen, based on your past decisions, we think it will be the right decision for you, or you may consider to go to that direction. We saw that you prefer technology, so we can have you diversify in going to, I don't know, that specific cryptocurrency or that specific, stock sector. Or on the other hand, you can tell him, listen, if you like technology so much, here are some opportunities that you may consider in that technology. So it can be very flexible in that regard, and we should always learn from the past and predict to the future. So it's a combination of both, I believe.
Alex, your thoughts?
I would like to add on that Forex brokers, any kind of broker, needs to do much more analysis on the existing data that they have, because the trader changes, the trader gets older. So at one stage of their life, they were, let's say, 20, 25. Now they may be 30, 35. So the whole situation is changing. They may be married, they may have kids. So before they used to be more risk-oriented. Now, since they have children, they might prefer something which is more secure, less risk, and so on and so forth. So I believe that, like my colleague said, yes, it's a combination, but brokers sit on a treasure trove of data that needs to be analyzed, and AI can do that much, much better than any human being can do. I don't know if the rest of the colleagues agree, but...
I would agree, and this thing is, I mean, brokers are sitting, as you said, on a treasure trove of business intelligence, but the challenge that I've seen personally, and I've seen other colleagues have, is what's the call to action with all this data? If you can think of anything, a lot of it's just very kind of macro, top level, but there is so much more. So you're telling me that based on the business intelligence we have, we can, let's say, plug it in with a type of AI, and it's going to tell us, we can tell the AI what we want, the action that we want taken, and then the AI will tell us how to do it, more or less.
They can, the AI may suggest, and 9 times out of 10 it might be right, but the end decision always lies with the management of the broker. So humans need to earn their pay, so they need to decide.
Got it, okay. All right, here. All right, well, look, guys, we have a little bit of time left, so what I'd like to do is 2 things. I want to have a Q&A, but I want to do it just a little bit of a lightning round. I'm going to ask one question to each person, the same question to each person, and have them answer in a 1 question or less. So we'll start with you, Lilian. In 1 sentence or less, what is the best advice you would give to a brokerage in regards to mastering trader retention?
Provide content in simple and clear and easy to understand. Don't hide it, and collaborate between your customer-facing teams and the content, the data available.
Got it. To you, Joe, best advice for mastering trader retention?
I think it'd be fairly similar. I think personalise the journey for the customer, and like Alex said, go and meet the customer where he is. If he's on different channels and wants to be communicated to in different ways, then do what you can to go there and you know, find them in those areas that they want to discuss information with you.
Alex?
Okay, mine is going to be slightly different. I'm going to say something about engagement. Gartner came out with saying that by 2025, all engagement will be with a non-human, meaning AI. And that's going to come to 2025, and we're nearly there.
Victor, how would you suggest for mastering trader retention?
Provide a good first user experience and don't make it too overly complex as well.
Got it, thank you. Dora?
So I'll do it in 2 sentences, but 3 words each. So maximize their success, make them as successful as possible, that's 1. And second, provide added value, because then they'll come back, then they'll show their friends. So that's the way of making them happy with the service you provide them, and they'll come back for sure.
Got it. Okay, and I'll stay on you, Dor. In 1 sentence or less, tell us your very, very bold prediction for the market in the next 3 years.
Up.
Up.
Up. The market, in the end, the markets, of course, the equities and the capital markets are the leader for the whole economy. So I think in the end of the day, the markets will go up.
Okay, but my mistake. Bold prediction for your industry or for the industry in terms of, let's say, technology.
I think we are part of an industry that always finds the way to solve challenges, to solve the problems that we are facing. So I think my generation, or in general, trading and investing is becoming way more popular in the general population, and I think we are heading to even better days, although today is fine as well.
Got it, thank you. Victor, your bold prediction for the next 3 years?
A lot of heavier regulation, and I would say unfortunately as well, since it's not something that everybody appreciates.
I'm in agreement there. Alex, bold prediction in 3 years?
Regulation is going to become really, really heavier, but you should not fear it. You should embrace it, and there are tools and technologies in order to work with the regulator and become a much better broker.
Thank you. Joe?
I think opposite to Dora at the end about the markets, I think there's going to be a big move to the downside, and I'm worried for the amount of participants that are new to the space who don't understand risk, and they're going to lose potentially a lot of trust in the industry. So I think there's going to be a much bigger focus on education over the next 3 years and making sure that people know what they're doing.
Got it. Lilian, bold prediction?
Regulators definitely force into more education. It will, with the newer demographics, the younger ones, to join the market. There will be a lot of mobile-first development, providing content easy, but also in meaningful content in a visual appealing way to make it easier to trade, but also provide more risk awareness.
Thank you, guys. Okay, I think we have a few minutes left. We can do some questions to our panelists, and then we will let you go. I think we have a question up front here. Gentleman in the white shirt.
Can you hear me? Oh, yeah. A question about how do you, obviously, like you mentioned, Nima, vast majority of retail clients lose money. Yeah. So traditionally, B-book is most profitable way for brokers to run their business. So how do you, as educator providers, then convince the broker to say, well, listen, we can educate your traders and they will be more successful, but that means you will end up with less money because they will have to move to the A-book. So how do you deal with that? How do you convince the B-book broker to actually that you need to educate their clients? Thank you.
Joe, you want to take that one?
Yeah, sure. So, I mean, obviously the broker will want to continue making money. Obviously, that's what the industry is for. But in terms of how they're going to convince them to do it, it's obviously going to be costly to add another layer into the process. If we're going to have to educate the client before they can actually place a trade, there's going to be another barrier there that's going to potentially slow things down. So everybody needs to be on board with it. I don't think it can be one broker taking a stance and not everybody else. So that may come down from the regulator, from the top down.
Have you seen instances, I mean, you don't have to answer, but have you seen instances where a broker doesn't want to help the trader? They don't want to provide the information. Maybe they'll use the excuse of the cost of the product as a way to divert that. But I mean, do you ever sense that, or I mean?
Do you want to answer that?
Yeah, maybe.
Sure. Thank you. No. I just wanted to say that it's like education. I think is not something that the broker should be like threatened from, because actually it's providing like more engagement, because the trader will trade more, and therefore they can kind of benefit from the volume placed, and that's, I think, like a benefit not only for the trader getting more educated, but also for the broker to have like more engagement. Right.
Got it. Thank you. Do we have another question? I think a gentleman up front.
Hi there. I'm a trader myself. I just became one when the COVID started. So before listening to all these panelists, I was just thinking that these brokers don't care about the traders, just like myself. But after listening to you guys, I came to realize that you do care, but I think you all are in the wrong direction. Just for example, day before yesterday, I made a trade. And I was looking at the candlestick chart with 1 minute's interval, but I didn't realize that I was looking at last year's data. And I was just waiting for a pattern, and the pattern was just there, but I was looking at the last year's data. So I made a bet, and it didn't work, and I lost a huge amount of money. But that was fine because I was ready for it. And the next day, I made another bet, and that was very successful. So, but I was just thinking, might be, in the platform, somebody could have asked me, why did I make the first bet wrong? So what could I teach to, to the other community members, to the traders? So might be you could have, improve your, trading experience better. So for example, if the customer is looking at the historical data, the color of the background of the chart should be a different one, rather than the active one. So that little difference could make a big difference. So here we are talking about the AI, the content. Might be we need a simple change which could have made a big difference. So that's what I wanted to say. So are you guys listening to really to your traders, like where did they went wrong and where did they went, they did perform well? So might be that could have helped better.
I think that's more on the broker level. I think most of these guys are just providing analysis and news about the trading, and then from a broker perspective, I think customizing on a client level. I mean, this is the name of the game. This is what a lot of brokers look to do, but ultimately, it's every broker operates a little bit differently in that regard.
Just one thing, I think it's a lot also like putting information into context, because for example, if you trade news, right, the market can move much more than under normal circumstances. And if you look at education in the past, to analyze the past gives you an idea how the future might move. So the longer there is a certain amount of time you need to spend on research, right, in order to get a feeling about how the market can behave, right? And if you look at education, what puts data into context, it gives you a little bit of an idea, for example, where to place your stop loss, in the future, not to be kind of stopped out straight away, right? And so those are the things where AI content can really kind of help you in the future. Right.
Thank you, Lilian. I believe, everyone, this is all the time that we have today. First, I just want to thank the audience for taking time out of your day to join us. I know we're the last panel. Thank you to iFX for yet another epic event. And please join me in a round of applause for our panelists. Thank you, guys.
Thank you very much.
Thank you.
Thank you.